Invesco QQQ Trust just triggered a short read on the overnight scan. Before I show you the entry, I want you to see exactly why. Evidence first, trade last. New here? One scored setup every single day. Subscribe, like, and share to keep the streak alive. We'll build this in 3 steps: what the chart shows, what smart money is doing, and finally the trade itself. Stay to the end for the levels. On to the chart, 60 daily bars and 1 story. Price action is in a downtrend of moderate strength. That's our primary directional bias right out of the gate. You can see the dotted lines on the chart. Green is our TP at $670. Red is our SL at $710. Those are the 2 numbers that matter most in this whole video. Now this is the fun part. The pattern detector picked up 3 chart patterns on the daily: double top, double bottom, descending triangle. I'm going to walk you through each one in the next slides and show you exactly where they formed on the price action. Pay attention to the labeled points. Those are the swings that confirm the pattern is real. Before the detail, tomorrow's scan is already scheduled. 1 tap now and you won't miss it. Pattern number 1, this is the double top. It's a bearish formation with 2 out of 3 strength. 2 peaks, 732.011, measured move target 669.81. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 2.6%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 2, this is the double bottom. It's a bullish formation with 2 out of 3 strength. 2 troughs. $590.94. Measured move target $639.80. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 7.0%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 3. This is the descending triangle. It's a bearish formation with 2 out of 3 strength. Flat support, $696.83, with falling resistance. Breakdown downward expected. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 5.8%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Levels time. These lines are where buyers and sellers have fought it out before. On this slide, you've got 2 resistance levels above price, 2 support levels below, plus our TP and SL inside that range. If price breaks above R1 cleanly and holds it, that's the green light for the upside scenario. If it cracks below S1 instead, the long thesis is broken and you stand aside. The TP and SL aren't arbitrary numbers. They sit at logical inflection points, which is why this map matters more than any single indicator. On to the indicators. We've got composite score of 0.26, technical 1.00. Positive numbers lean bullish, negative numbers lean bearish. And what you're really looking for is agreement across multiple boxes, not just one indicator screaming. ADX is at 27, and that tells us we're in a moderate trend regime. Important because some strategies only work when ADX is above 25. On-balance volume is bearish. That's a sneaky good way to spot whether the smart money is buying or selling underneath the price action. Pause there, because everything you've seen so far, any retail trader can see. What matters is where the big money is positioned. Time for the institutional read, smart money concepts. On the daily chart, the SMC bias is bearish, with a downtrend market structure. The most recent order block is a bearish zone between $718.45 and $726.08. That's where institutional orders are likely parked. We've also got an unfilled bearish fair value gap between $698.66 and $702.80. price tends to revisit these imbalances. Most importantly, we just had a bearish move at 737.62, a key structural signal that smart money traders watch closely. Now the volume profile, where positions were actually built, which is where price reacts. The point of control, the most traded price, is at $602.46. The value area runs from 561.46 on the low side to 628.55 on the high side, meaning 70% of all volume traded inside that zone. The signal here is bullish. Price 687.199 is above value area high, 628.055. Trading above VAH indicates bullish strength. POC at 602.146 is key magnet support. Let's check order flow. Who's been pressing, buyers or sellers, candle by candle? Over the recent window, buying pressure accounts for 35% of volume versus 65% selling. The overall flow signal is bearish. And to round out the indicator suite, 3 more advanced reads. Money Flow Index, the volume-weighted RSI, reads 35, signal neutral. Williams %R is at 58, neutral. Chaikin Money Flow reads +0.01 neutral. Together, these 3 confirm whether the volume's actually backing the price move or whether it's just speculative noise. Fundamentally, this one's pretty in line with its sector. No screaming value or screaming overvaluation. That's actually fine. We're trading the chart here, not the company. Zooming out for a second, let's talk macro. On this slide, you've got the primary trend, its strength, the ADX number, and the volatility regime measured as ATR%. Here's the thing, a setup that looks textbook in isolation can totally fail if the broader regime is fighting it. So you want to ask, is this trade swimming with the market current or against it? The 5-day and 20-day moves at the bottom answer that. News and sentiment are mixed right now. No dominant story pulling price one way or the other. When that happens, we just lean on the chart and trust the levels we drew earlier. Levels in about a minute. If this format works for you, join the channel. It's daily. Risk management next. The only edge you fully control. On screen, you see the dollar risk per share, the dollar reward per share, and a position sizing table built around the 1% rule. The rule is dead simple. Never risk more than 1% of your total account on a single trade. So if you've got a $10,000 account, you're risking $100 max. And that decides the share count, not your gut feel. Get this right and you can be wrong 10 times in a row and still be in the game. Get it wrong and one bad trade can take you out. Time to pay it off. Here is the exact plan. We're shorting near $700. Target sits down at $670. Stop loss above at $710. Risk to reward 2.93 to 1. That's the asymmetry we want. For every dollar we put at risk, we stand to make 2.93. Horizon, roughly 5 feet. That's the setup. One more time. This is educational, not financial advice. Markets are risky. Trade your own plan. Never risk what you can't afford to lose. If you're keeping score with us, hit subscribe. Results get posted publicly every week. So zoom out for a second. What we just walked through on QQQ, that's a short bias setup projecting roughly 4.3% from here. And here's why it matters. Every piece we looked at, the chart structure, the candle confirmation, the indicators, the institutional order blocks, the volume profile, the order flow, they all stack in the same direction. When you see that kind of multi-factor agreement, that's when the highest conviction trades happen. Now, here's what you do next. If this breakdown earned its spot in your feed today, smash the like button. It actually moves the needle on whether YouTube shows you the next one. If this stacked up for you, say so in the comments. Trade safe. See you tomorrow. The next scan is already scheduled. Tomorrow morning, whole market, one winner, full breakdown. Stock or crypto, whatever ranks highest. Subscribe and hit the bell so it lands in your feed. See you then.